Hello everybody, welcome back to a new style of video, and today we are going for the full-on informative level and lesson on how we can make money with Forex. So a new type of video today, like I said, please do leave a like on it and subscribe if it sounds good and if you are interested in this market, because I'm going to be covering all of the basics that you need to know in this series, but tonight I'm focusing mainly on pairs and what they mean. So going over all the types of pairs and how you can make money knowing which pairs is which pairs. So first things first, like I said, I'm not going to rush this video. This is going to be quite a long one, so just bear that one in mind. I'm going to go over everything quite slow, so it's understood properly and so that everything is comprehended well. So please do leave a like, because this is a new style. Anyway, we're going to jump straight into this one because everybody talks about the Forex lifestyle, but nobody actually tells you how to get there. So I'm going to read out the titles, and I'm going to read the points and then elaborate on them. What got you into Forex? That's the question. So, was it prior knowledge about the stock market and other points and other markets? And is it just a curiosity to venture into Forex? Well, with a lot of people that is the case, but with most people these days, probably not. The Forex market is one that's talked about so much, it's sold, if you will, by Instagram influencers, and it's sold because they are capitalizing on selling courses based on Forex or selling groups, whereas necessarily does that make them the best investors? Are they even investors sometimes? Sometimes they aren't even their own investors and they're selling you a course for about £2 a time, £1 a time. Honestly, very expensive courses to get into. So yes, this is a problem. And the problem with this, actually, their info can sometimes be trusted. So obviously they are teaching you things that you can use, but the thing is, this is hidden behind a massive paywall, like I've just said. So massive paywall of a few grand at a time, or a few £100, whatever it is, subscription a month, sometimes for these signaling groups. It's just too much money, and I can explain this here for free. So all I ask is that you like the video and subscribe, and here I'm going over everything that you'll need for beginners to know about these markets. Now obviously, I'm not saying that you're going to watch my videos and you're going to be able to jump straight into the stock market and know everything, but this is going to be a great basis series that I'm making right now. So the Forex Explained series is going to be a great baseline and a great basis for you to start off on. It will probably teach you everything that a course will for money, and all I ask that you do is like and subscribe to the channel. So that is all I ask, and that is all I need. So like, if you're a subscriber, and if you're not a subscriber, you obviously don't know, but you can always go and check it out because it will have been carded in by now. Prior episodes in the Forex series covered a brief introduction into the Forex markets. If you see FX, that just means Forex, I'm sure you know this already, but yeah, covered a brief introduction into the markets and some of the things that you will need to know. Your expectations more realistic, and I accept that things basically take time. So like I said, selling this lifestyle, it's a get rich quick lifestyle. I'm not saying that you can't get rich off it. Obviously you can. There are some $1 billion investors there, and there's quite a lot of $1 million investors out there. So it's very easy, well, not necessarily very easy, but it is possible to get rich off this market and off trading stocks in general. So when people say, oh, Forex is a scam, well, it's not Forex that is a scam. It's just the people that are selling these scam courses, and they're leading you into a life or a lifestyle that's just not realistic. Things take time, and that's just what you need to know for the basics. So that's everything that we're going to cover quickly. But yeah, you are trying to make quick money. Like I said, that's not necessarily going to happen. So I'm not the biggest fan of the Forex market, but you do need a level of skill. Even though I don't personally like to trade it, it is fair to say you do need a level of skill. Now, people do assume that these skills are technical analysis skills. If you don't know what technical analysis is, it's basically when you see the guys reading the charts. But that is not necessarily always the case. Yes, technical analysis is true, but the mental side is actually quite a lot of it, because you do need to risk things when you're getting into Forex. Now, I'm not saying risk everything, because obviously what's the point in jumping in all the way when you don't need to, but one does need to have a strong mentality which allows them to take the risks and accept the consequences. Now, I'm not saying, oh, jump in with your life savings and go and pay for a Forex course, like a lot of people do say, but if you've got £100 that you're willing to risk and it could all get lost, you need to know that it cannot get lost, but if you are willing to take that risk, you're okay with it. So get in the mindset and then you'll be ready for it. So what you need to know is a lot of things are important, such as position size, risk to reward ratios. Now I'm going to be covering all of these in future videos. So risk to reward ratios, position sizes will be coming up very, very soon. To know about Forex courses and Forex, at times it is true, yeah, analysis will always come in handy because you can read the charts, but there are always other fundamentals and variables which will stay the same and will be consistent, and if you know about these variables that will always be the same, then half of your problem is solved. Because it's one thing to read the charts, it's another thing to know about news releases, it's another thing to know what pairs are, it's another thing to know about sessions, and Yes, chart reading in different sessions will change. Chart reading in different currencies will change, and things like that. And when news releases come out, chart reading will change again. These are just the basic things that you will need to know just before you go all the way in to Forex. So here is a quick introduction to the actual pairs. Forex, Forex, Forex. So often talked about. Of course, you want to get into the market, but you need to know the lingo if you want to do this. As I said, the lingo, if you will, is all sayings and terminologies used by traders and people in the market. So first of all, I'll be explaining what Forex pairs are, what they mean, how differences cause fluctuations in risk level, and also methods of trading as well. So first things first, we're going to jump straight in with what is actually a pair. So obviously a lot of people will know this. So this is going to be a bit that's a little bit basic to some people, because if you're already at this level, maybe skip on to the next slide, skip the video 1 or 2 minutes, come back, because a lot of people will know this, but a lot of people won't. So I didn't need to cover it. So it's a crucial part for me to cover. So yeah, starting all the way at the bottom, it is important for me to cover this, like I just said. Simply two currencies up against each other, and these make a pair. So for example, the United States dollar against a Great British pound is a currency pair. Basically, when the USD is against a Great British currency, we are in a pair. So first things first, the first of the two currencies will be the one which we are betting on, and this will be betted against the other. So the only two currencies which will be in this pair are the two currencies listed in this pair. For example, USD and GBP. Very simple to understand, very back to basics here, but it is necessary for me to say this. So the first one that came, which is in this case the United States dollar, is the one which we are anticipating to change in price. So for example, we buy this when we want it to go up, and we sell it when we think it's going to go lower. So yeah. So this sounds quite obvious, but there are different pairs, as you know, because you can see United States dollar, Great British pound, euro, things like that. But these are actually further categorized into pair types. So there are a few types of pairs, and we're going to start off with the most common one. These are major pairs. So major Forex pairs, or even key Forex pairs, include things like United States dollar, Great British pound, Japanese yen, CHF, which is franc, I believe, Australian dollar and Canadian dollar, and these are basically the major economies of the world. So fun facts and information that you might want to know for market volatility purposes. United States dollar and the euro accounts for 30% of all currencies traded, whereas the United States dollar itself accounts for 80 to 85% of all trades made in money, which means that this is clearly the most popular one, and a lot of majors will use the USD in their pairs, therefore. So you can imagine Great British Pound, Euro, and Japanese yen, all against the dollar separately. So dollar is used in quite a lot of pairs. So as a summary, majors are basically the largest economies and currencies traded against each other. So minors on the opposite side are currencies which are lower economies, and these are basically traded without going through the USD. So basically, we can imagine these are smaller economies, and they are therefore less commonly traded. So that is information that you might want to know getting into minor pairs. And exotic pairs are a similar story, because they are like minors in the sense they got lower volatility, smaller economies, and these are also based against each other. So exotic pairs include things like TRY, HKD, NOK, SEK, ZAR, MXN, and that's just to name a few, of course, because with so many different smaller economies, there are bound to be a few. But yeah, so basically, trading minor currency pairs leads to lower market volatility due to the fact that less traders are actually trading with these currencies. So these are important. So market volatility in currencies is important to know, and I'll probably cover this in a later video. But yeah, so that's just one fact about this. So therefore, if we're trading two minor currencies against each other, lower volatility, it may be a great idea to trade a lower volatility currency, exotic or minor, against a higher volatility major or something else. So I'll be covering that maybe in another video, but I would recommend you do your own research on trading majors and minors and so far, but these are just the basics of it. So then we got crosses, and crosses are simply when you cross currencies and they don't involve the United States dollar. Like I said earlier, most major pairs will. However, when they don't, these can be crosses. So we've got things like pound crosses. These are Great British Pound crossed with things like Australian dollar. It's supposed to say AUD, cross with things like the euro, and then euro cross with things like the Great British Pound, Australian dollar, things like that. Same with the yen. These are basically all these currencies cross against each other, just without the Great British Pound in the middle, or sorry, the United States dollar in the middle. So, fun fact, there are another type of pair less commonly talked about, and these are commodity pairs. Now, these are economies which are basically based on commodities, and that's where the country's assets come from. So, countries rich in assets, and the economy is mainly based off commodities. I think an example of this is something like Australia, because of course you can imagine they have quite a lot of nice things in commodities to trade. So from a quick glimpse, we need to look into sessions because sessions will play quite a nice influence on this. So depending on what session we are in, I'm going to cover sessions in the near future, by the way. But yeah, depending on what session we are in, we're just going to foreshadow it here. They can change the market volatility greatly, so it's important to know about different ones. So obviously more volatile sessions where major currencies are at play. So for example, the New York session will affect the dollar move a lot more, whereas smaller currencies in smaller sessions lead to low volatility. So things like the Asia session are low in volatility, and things like the cross between the Great British session and also the United States session will be quite heavily used and quite volatile as well. So yeah, there's a quick introduction into these things. So I hope you enjoyed this quite quick video. It's probably been the longest one on the channel so far, but it has been fun to make, and I hope it's been informative as well. I did try and cover it as quickly as I can. Now, I said that I would not rush it. But I did basically rush it a little bit. So there we go. I hope that you understood everything in the video. There were a few mess ups, so please do forgive me for that. But yeah, they are the basics of trading these currencies. So thank you very much for viewing. Please do subscribe and watch any of the videos on screen, and I'll see you in the next one. Goodbye for now.